So, what's the relationship between an economic slowdown and the interest rates? Frequently asked questions are when will the rates come down? Will the prices be coming down anytime soon? So, there's a lot of predictions out there, a lot of headlines. Thanks for coming to this channel for up to date market information, direct and to the point, so that you can make informed decisions to reach your real estate goals. So, we already know that the Fed has been increasing the federal funds rate so that to address this inflation we're having. And so that's been going on for a while, and that has an indirect on the 30-year fixed interest rate. And so we also know, if you've come to my channel, that when the 30-year fixed interest rate has been rising, contrary to logical thinking, the prices don't go down. Home prices have continued to go up in previous times that has happened. The number of sales has gone down, and the number of months of inventory has increased. And so that's what we're seeing now. If we look in my zip code, which is a microcosm for the city and the county, we see that the active inventory is increasing. The number of sold properties is going down. Less of them are selling. Days on market is increasing, taking a lot longer to sell, and there's more months in inventory. That's exactly what has happened historically. It looks like the trend's going to continue for a little while. And so we've seen headlines saying the prices are dropping. Yeah, the asking prices are dropping because sellers are asking too much. But of the average, the actual closed escrows, it was $758 square foot a couple weeks ago. Now $759 per square foot just last week. So the sold properties are not actually dropping. That's a little bit of a myth that you're getting if you think that. Recession doesn't equal a housing crisis. You know that if you've come to my channel previously, that in other time periods when there's been a recession, the home prices have actually increased, except for this time in 2008, where it went down by 20%, and in 1991 it went down by 2%. And I'll put a video here in the description, up here on top, a link on there, saying how this time period right now is not like it was in 2007, 2006, right before 2008. It's a different time period. And so mortgage specialist says, not me, throughout history during a recessionary period, interest rates go up at the beginning of the recession. But in order to come out of a recession, interest rates are lower to stimulate the economy moving forward. So here is the reason why the home prices have come up even during recessionary times, because the rates have come down. Look at all these time periods here, and look at how the rates have come down. The rates come down, people qualify for more, they can afford more, the prices go up. Fortune.com explains over the past 5 recessions, mortgage rates have fallen an average of 1.8% during the peak of the recession to the trough. David Childress says, not me, when an economic slowdown needs to happen to help taper inflation, unfortunately, typically it has meant the cost to finance a home has gone down. When it costs less to finance a home, prices go up. And so no one knows exactly what the future holds. However, if you are considering selling, you know that there's more properties that are available you'll be in competition with. There are actually less buyers in the market that can afford the current high prices. It's going to take longer to sell the property. Ideally, you want to get your property in tip-top shape because you're in competition with other sellers. If you're a buyer, here's just something for you to consider. Consider this. Let me know what you think about this, and I would like to hear back your feedback on it. Seriously. Let's just say you're a buyer and you buy a property right now at 6%. The rate's actually dropped to 5.4. Let's just say $800,000 at 6% or 5.4%. Let's just say you own that property for a year and then the rates drop, as has happened in other recessionary periods. The rates drop, let's just say 1 point. Now, if the rates drop, the value of your property is going to go up. So you're going to end up, let's just say 800,000, 900,000. Let's just say it goes up 100,000. You refinance at the lower rate, you have a lower payment. Isn't that a benefit to you? Rather than continue renting, have equity and have a lower payment than it currently costs right now. Wouldn't that be a great scenario for you to happen? Anyway, let me know what you think about that. Please click like, comment, subscribe, hit the bell. I'll see you in the next video.